As a technical trader, following technical patterns, being mindful of geopolitical macro data and things like that, watching the VIX and the yields and the dollar and specific compass stocks that are part of our internals grid, the correction of lower lows, lower highs, and breaking that ultimate support level here, that, my friends, is still intact. So until you get back above a close above the 200, if you were to get that like in the next day or two and then take out this high, does this and then takes out that high, then what would you have? Well, you'd have a series of higher lows and higher highs and back above the 200. The correction would be nullified. Another way of looking at the correction is you could say, what was the big thrust, to the downside? You might say it was this candle on Friday. So if you take out this candle completely and actually close above the high of Friday, some might say the correction has been, begun, because now you took out the selling of that candle. I don't look at it that way. I look at the sell-off really began when this dropped and cut through the 200 and then bounced. What happened after that? This is the sell-off. Let me put it in pink. From here. So in my mind, you got a 50% retracement of that, which is basically where we are right now. If you close above that, that does tend to give you a short-term, hope that things might go higher. And then maybe it gets above here and maybe it does this. So if you have a short-term potential to do this, and then maybe that's all she wrote and it goes lower, then what do we do with our short portfolio that we have? We don't have a lot. Took off a lot of trades last week. Friday was the second most profitable most profitable day for me in the 6.5 years of Trade With Me Now. I'm including the 7, 8 months prior to opening Trade With Me Now, because that's when I started trading the market weather concept. It was actually October of 2019. So 2019, that's seven years in November, December, January, February, March, 5. So 7 years, 5 months. Friday was my second best day. A part of it was the oil trade that I held, and the faded decay just was beautiful and just kept making more money every day I held it. But so I still have short positions, as some of you do too, right? You might have some for this Friday. Most of you have them for out to here. So if I'm short here in April, do I take those shorts off now that we have kind of reversed? My answer would be not yet. You don't remove, if the reason for having long-term short, puts, let's just say, was a structural break of the markets. Until then, you were only trading, March monthlies, March weeklies, right? The weeklies, we were trading it here. But once we decided to lay into it a little bit more longer term, that's because you're making a technical commitment to short this market and you're going longer term. And when I say longer term, I don't mean months. I mean just, you're in the month of March, you're going to go into April. Everybody with me? So that's your decision based on the technical analysis that we made. Well, as far as I see in the charts, this narrative and setup has not changed. However, you might see bounce. You might see bounce and temporary recovery. So you have bounce, temporary recovery, and then a full recovery that leads you to a rally. This is what could happen. But until it does, I'm not going to trade it as if it's a full rally, because we're in a rally to the downside, right? I'm not necessarily going to trade it a full recovery or, a true recovery. I'm not going to trade it as that because it hasn't done that yet either, right? We haven't captured this level yet. So I'd have to treat it like a bounce. So how do you treat it like a bounce? Those of you that have been around with me for a while. This is not a recovery, not a recovery rally. It's not a rally and it ain't a recovery. Right now, it's a bounce. It's a strong one, but it ain't a recovery. So what do we do now if we are net short going into April? There are a few things that we can do now. Yeah, walking dolphin. So one of them is to place a hedge. Now, would we do that long term or short term? Would we put a hedge on for April like the way we have our puts? For our puts are in April. Do we then buy calls for April and just see which one works? Is that how you would do it? Short term. Yeah, like this week. Yeah. So, and why? Because if this ends up being a short-term bounce, gets rejected, and the selling resumes, then that would make sense because your puts in April are because of a longer-term narrative that has come true. Support has broken, and this is nothing more than a bounce, maybe a little bit more than a bounce. But it does give us an opportunity to do a few things. One of them is to do short-term hedges. Yeah, short-term. Maybe trade it up to here. Maybe just for this week, right? Just for Friday, put a little something, something on. And if we do end up getting that continuation, we make a little bit of money there. And then we have to evaluate, right? Let's just say we got a continued move into Tuesday, Wednesday, Thursday. I don't know, maybe even to Friday. We put on a short-term call position on whatever we choose, and we make a little bit of money. Once that happens, you must go back to your technical setup that got you net short and go, is the setup still intact? Am I still in a corrective mode? Or is this now shifting into recovery? Because now we're making higher highs and higher lows. We're above the 200. Certain sectors are coming alive that were really beat up, like financials, tech, real estate, all the ones that, utilities, the ones that really suffered, all of a sudden are getting real buying. Maybe I need to reevaluate this position. So that's something that you must do if the hedge starts to pay off in the next few days and you're making money on the hedge. You must always be reevaluating your position. Now you might say, well, I made money on the hedge, but I don't see a structural break. We didn't take out the 200. We didn't take out this level. Nvidia is still here. Bitcoin is still there. The narrative is still intact. Well, if that's the case, then you take the money you made from the hedge and you reinvest it here, bringing the cost of your puts down further and averaging down, I mean. So what's so great about that is it gives you an opportunity to add to the trade with house money. So think about it. If you had $500 in short puts, not short puts, but puts for April, and then you did a small hedge, maybe $50, and that's just for this Friday, and you put that in calls just to see if you could get a bounce, and you go to boom, 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 and then you end up making like $120. That $120 is profit. So you got your $50 back. Now you got $120 worth of profit. But these puts that you now bought are probably not worth $500 because price moved up on them, right? So now they're maybe only worth $250. Well, bullshit. I can take this $120 and buy a bunch of these for, at this rate, however many you got. And now I'll have $620 worth of puts, but I brought my average cost down. So I increased my allocation and brought the overall cost per option down by buying more. But I did that with house money. I didn't have to go into my pocket to do that. I did that from the money that I got from the hedges. Everybody get that? So that is one decision you can make. Another decision you can make is, well, I'm not ready to add. Okay, I'm not going to add. But I'm now going to reduce the cost. That does reduce the cost. And now I'm only into this trade for $380. My break even now has changed. This is fantastic. I was okay with $500, but now I made a little bit of money on the hedge. Look at my costs now. So that's good. So in re-evaluating where you are after the bounce to the upside, you can decide to put the money into more average down. You can just put the money in your pocket, lower your costs. But in reevaluating, you have to decide if you are still net short. If it turns out that you're not, then you want to wait for that pullback that you'll inevitably get and use these little pullbacks to ease out of your short position and take that money plus the hedge money that you made. And now, once you are in full correction, stability, and then recovery mode, and then recovery rally, you can take that money and switch gears. Then you can move to calls. And are you going to do long-term calls here? You're going to go all the way out to May and June with your call position? This is now your new narrative. No, common sense, not yet, right? Not yet. So common sense, remember when we were putting on short trades here as we initially breached the 50 and the 100? We were net short here, right? Remember? But we did most of them for the first week of March, second week of March, third week of March. Remember? We kind of went out 1 to 2 weeks. Why? Because we didn't have the full technical break. So we were short, but we were, putting on our trades maybe 2 weeks out. Until what? Until we got a confirmation of the recovery, the correction. And then that's when we took profits initially, profits for like 2-3 weeks in a row. And then we leaned in to the April narrative. Because now we've broken structure and it's not going to just disappear in one day. So if you get the reversal here in this bounce, and it's not just a bounce, and it starts looking like a recovery, and then you get to the point where not only is it a recovery, but it looks like we're in a recovery rally, like it might go even higher, well, and you want to switch gears and start buying calls, then just go out 1 to 2 weeks with your calls. Until what? Until the rally confirms. What would that be? Where would the rally confirm? Like if you looked at this chart, where does the recovery in this is one way of looking at it. Recovery, confirm, rally, confirm. Where on this chart is the confirmation that it's not a bounce anymore, that it's now a recovery? Because you can short bounces all the time, right? Short it, like we did here, like we did here, like we did here. I've been shorting the bounces for weeks. Hey, Michael, you could use the 100 and the 20, possibly. You might think about that. The problem with the 100 and the 20, they're a little too close together. So I'd want to go maybe a little further apart. Oh, you're actually giving me a number, 69.19. Sam, I am. Yeah, so that's the 50 period simple, right? So what I would say, looking at this chart, you guys are on the right track, is that the recovery rally, how do you know it's a recovery and not just a bounce? Well, the recovery rally, most likely, if you look at the chart, is going to be right about here, right? Because that's really where it found support and then tanked from there. So if you get above this, which, oh, by the way, is where the 200 is, this area here, in my mind, confirms that we're in a recovery. It's no longer a bounce when you can breach that level that broke and you get back above it and you can hold up above it. To me, that's a recovery. Does everybody see that? And so the methodology here. If a level was breached and closed below, this is if price is moving down, the level that breached closed below, right? If that gets a retest and then a hold, see this? Retest. That means it's going to come back up and test it. But if it holds that retest and stays above it and doesn't fall back down, then the correction versus recovery, the correction in the markets, this is over. Now, it doesn't mean it can't roll over again, but the initial correction that we confirmed when price closed below the 200, if you get back above the 200, which, oh, by the way, is 1, 2, 3, 4, 5, like 5, 6 trading days it hung out up here. If you recover and get back above there, this retest area, then you are no longer in a correction phase. You are in a recovery phase. That doesn't mean you are in a rally, but you are in a recovery phase. And in that recovery phase, you can trade. You have to be careful because it could rally, it could head back south and recorrect. So in the recovery phase, you trade less. So now you could potentially trade up to that and see how you do. But if you get this to this recovery phase, you might want to think about reducing your exposure to shorts, right? Because if it's now recovering, you don't want to just hold on to the shorts indefinitely. So maybe you de-risk a little bit. Maybe take some of that short stuff off. Leave a few on. De-risk a little. This is the direction it's going. Wait for a pullback hold. Get a good pullback entry on some longs. Short term. I'm not going to get rid of my entire short portfolio, but long term. Enter long, but short term is what I want to make sure you understand, right? Just get a little bit. Sam, it's not only where some buyers came in, but there was, I guess, for lack of a better way of saying it, more buyers than sellers. Yeah, so you have the buy the dippers came in, and then the algos come in, and the retail chasers come in, but then you get some real buying, light as it was, but you do get some rotation of trading that holds it at that level, yeah. But if you don't get that again, and that area doesn't hold and heads back down, then yeah, you are back in correction. Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.